It takes us to our talk of the tape, the next leg of this record-setting rally. It's clear where our headliner stands on that topic. He's bullish, as you know. He is Fundstrat's Tom Lee. Joins us now post 9. It's good to see you.
Great to see you, Scott.
Nvidia looms large. Does that make or break whether your bullishness comes to fruition moving forward?
I know investors are really anxious, and Nvidia has not performed well the last few times it's reported. But the story arc there remains that that is one of the most important companies in the world, in the middle of the biggest structural change in the world economy. So I think Nvidia still is a great story. It really wouldn't change our thesis if the stock reacted poorly.
You feel like there's become a little more AI anxiety, as we wrote at the top? You know, from Sam Altman at OpenAI saying that, investors are a little overeager about AI. Meta's reorganized again. They've stopped their hiring. There was another report today that suggested some of these Gen AI models, AI models are failing. You think there's anxiety in this market about this trade?
Well, I think everyone's trying to get situational awareness. Like, is this inning 1 or 2 or late innings? Because we know there's been a lot of value creation and a lot of capital that's flowed in. And we know that Silicon Valley has seen a boom of companies with $100 million annual run rates, like in record time around AI. And a lot of people want to ring the bell at the top. But to me, it still feels really early because there's such a limited number of stocks that public investors can buy that represent a direct play on AI.
I know, but that could lead to bubble-like activity, right? When your pool of investable opportunities remains so small, all of this money rushes to a select few, and then they have to live up to all of that hype and give a great return on these hundreds of billions of dollars that are being invested. That's not a risk?
Well, it is a risk. I guess that's really the next stage of what we have to see is how does the market accept now adding to the roster of direct AI plays, beyond just Figment. And I think, if we look at the next 12 months, there'll be a bevy of IPOs, some really big companies that are later stage. But if they're bought and they produce good growth and their stocks perform well, I would still say that still means we're early innings.
That's still your favorite trade?
I think it's the most important trade, yeah.
I know it's the most important. I feel like that's legit. But is it?
I think there's a bigger upside in the owning financials right now. Because financials are benefiting from AI.
Okay.
So they're the second order beneficiaries. Plus they're getting the green light to build on the blockchain, which could really make JP Morgan and Goldman's business models so much more profitable and change their multiples, expand them. So I think, yes, I'm still bullish on AI, but I actually think the financials are really one of the legs that drive us the next 12 to 24 months.
Oh, interesting. No matter what the Fed does from here, does the rate picture matter for the bank stocks?
It does, because it helps. It provides the liquidity to sort of liquefy housing and corporate lending and bring spreads down. But I think the financial sector has produced visible earnings growth for a long time through these cycles, and they are trading like cyclical stocks. JP Morgan and Goldman should maybe have tech multiples, and so I think there's upside for financials.
They're aside from when the broadening started to happen on the idea of rate cuts, those were the type of stocks already that were leading this market along with the mega caps. This is a large cap stock rally, right? Industrials,
correct.
The biggest names out of the industrials, the biggest names out of the financials, the biggest names in tech were leading the way.
Yes.
You think that continues?
Yes, and because, at the end of the day, when you look at GDP, for every unit of economic activity, there's one unit of financial. So financials are half the economy, but they're not half the index. Now, I'm not saying they're going to get to half the index, but they really should re-rate. I think even this quarter, right, the numbers from JP Morgan, Goldman, and the financials, and look at the bullish IPO, these are all good signs to me that you want to be overweight financial.